Hey guys, welcome back. In this video, I will teach you the simple SMC trading strategy that's going to help you become profitable. Let's get straight on with the video. For this strategy, we are going to use two time frames. One is going to be the higher time frame and the other one is going to be the lower time frame used for your entries and all. For higher time frame, I'm going to use the 4-hour time frame. My higher time frame is 4 hours and my lower time frame is 15 minutes. I'm going to use the 4-hour time frame for my higher time frame analysis and 15 minutes for my entry and all. Here are the rules. On the 4-hour time frame, first of all, you want to look at the order flow. On 4-hour time frame, look at the order flow. If the order flow is bullish, you want to take longs. If the order flow is bearish, you want to take shots. If you are new to SMC concepts, it simply means if the trend is bullish or bearish. If the trend is bullish, you keep taking longs. If the trend is bearish, you keep taking shots. On a 4-hour time frame, look at the order flow. Let's say if the order flow is bullish, what you want to do is you have to mark out every single order block near the price section. Mark out every single order block near the price section. What I mean by every order block is a support level. What is a support level? It's basically an order block. You might hate me for saying this, but an order block is just a support and resistance, refined support and resistance levels. Our very first step is on for our term frame, which is the higher term frame. We have to look at the order flow. Then the second rule is, mark out every single order block near the price action. Let's say if price is here, there could be an order block here. There could be an order block right there. Could be an order block right there. You want to mark out this order block, you want to mark out this order block, and you want to mark out this order block. Essentially, before we even begin with the strategy, you want to understand what is an order block. The body of the candle, let's say we had a push down, and then we have a push up. The last bearish candle, the body of the last bearish candle is going to be your order block, or consecutive bearish candles before a move to the upside could be your order block as well. So your order block could be the body of the start of the consecutive bearish candle before price went ahead and did a market structure shift. Now that these concepts are clear, let me get straight into this strategy. The rule number 3 is you want to once you have marked out your order block. So let's assume that this is your order block on a 4-hour time frame. You have marked out the order block, which is going to be somewhere around here. You want to wait for price to come back into your order block. Let's say price comes back into your auto block, you want to drop down to 15-minute time frame. So when you drop down to 15-minute time frame, the structure is going to look something like this. So you simply want to look for a shift in market structure. Once you have a shift in market structure, here, you want to mark out the 15-minute order block. So there could be consecutive bearish candle before move to the upside, or it could just be a single candle. So you just mark that single candle, the body of the single candle out. Remember, ICT says that for order blocks, wicks, we do not mark out the wicks, we only mark out the body. If you mark out the wicks, what's going to happen is sometimes price can give you an inducement. So what's going to happen? Price is going to tap into wick of the auto block, push back up, and then stop you out at break even or something like that when it mitigates the body of the candle. So we have our 4-hour order block. We know that the trend is bullish, and so we wait for price to come back into our poi. We drop down to 15 minutes, we look for a shift in market structure on 15 minutes, and we mark out the order block. Now, this is very important, we have to take time into consideration. So your entry is only going to be during these hours. So let me tell you what is the timing. So essentially for this strategy, specifically, you can take your entry from 2 a.m. till 6 a.m. New York time. And 7 a.m. till 11:30. 11:30 a.m. New York time. This is the timing, guys. Remember that, 2 a.m. till 6 a.m., and then 7 a.m. till 11:30 a.m. New York time. So make sure you set your time zone to New York, and this is going to be the time. Your entry must be doing that level. Let's say the time is now 2:10 or 2:15 a.m. Price comes back into your order block, boom, you take your entry, you simply go for, if there's any fair value gap, mark that out. You target the closest area. You don't want to hold your trade. You're simply just taking profits and just getting out of the trades. Essentially, you take your profit at minimum 1 to 2 risk to reward, and you can take 80% of the trade-off at 1 to 2 risk to reward, and then you're going to hold your trade till this extreme fair value gap. This is basically the whole strategy, guys. You mark on every single order block near the price action. You wait for price to come back into your poi. You wait for market structure shift on 15 minutes time frame, and you look for your entry during kill on hours. I will give you guys a couple of examples, and then this is going to be crystal clear to you guys. Alright. Here's example number 1. As you can see, I'm looking at Euro USD on a 4-hour time frame. As you can see, the order flow till here was bullish. But then we had this huge displacement, we broke this structure right there, and we also broke these structures here as well. After breaking these structures, we also have a break of structure. That gave me a sign that we could be bearish for now. What I would do at this point is I would mark out every single order block near the price section. You don't have to mark out this one or this one, but somewhere around here. What essentially is an order block, and my definition is the first candle of the fair value gap, but ICT says the last consecutive bullish candles before the move to the upside, before the move to the downside. Again, for this example, would be these bullish consecutive candles. And price breaks this. You could take your entry from this level. However, we always want to mark out the last candle of the move. We have this order block. This is the last candle of the order block. This would be your order block. Similarly, this right here could be your order block. You see, these are 2 candles. You want to choose the last one here. This is your order block. Essentially, we could also say that these are supply areas, supply and demand. So this could be supply areas. Another example of order block would be this right there. You can see we have this candle and this candle right here. So I would choose this as an order block on the 4-hour time frame. But on the 15-minute time frame, when we're going to take our confirmation entry, we have to take our entry from this candle. We have to take our entry from the beginning of the order block. On the higher time frame, we want to refine our entries. Anyways, we have this order block, we have this order block, we have this and this. We also do have this order block right here. This is an order block as well. But as you can see, price did not respect these levels. So now what I have now at this current level, price did not even have a break of structure at the moment. But I can still look for shift in market structure to the downside because I know that trend is bearish. And for this strategy, you don't have to even look for a break of structures. You can just simply mark out every single order block above the price action since we are bearish. We simply wait for price to come back into one of our zones. As you can see, there's still some gap left. I would wait for price to actually mitigate the order block. Once price hits this level, what I would do is that I would drop down to 15-minute time frame. So as you can see, we touched the order block. This is the order block level. And we have this structure, mini structure here. So we have higher high, higher low, higher high. We broke the structure. That is a confirmation for us that the trend is shifting. We have a shift in market structure. And as you can see, we have this green candle as our order block. So let's say there were 3 bullish candles. I would take my entry from the very first candle of the order block because since we are on 15 minutes, if you were on 4-hour, I would only choose the last candle of the order block. So what essentially I would do is I would look for my entry. But before that, I want to look at the time. What is the time? It's 4:45. So we are good at the moment. So I would put my start right there. I would go for 1:2 as per my rules. But you can target the liquidity levels, fair value gap. It's really up to you. And as you can see, we got our entry at 5:15, which is a beautiful signal. And also there's one more thing. If you get a market structure shift on 15 minutes time from during kill on hours, it's going to make that setup even more, it's going to help it play out even better. Let's say you had a market structure shift not in the kill on hours, then that market structure shift could be a weak one. But if you get a market structure shift during kill zone hours, that is a plus point. Okay, so let's say that, as you can see right there, this is a beautiful example. So let's assume that the price touched the order block right here. And we had a shift in market. Notice that this is where the market structure shift happened before kills on hours. And that's why this order block did not get respected. However, we have a liquidity sweep, and then we have a shift in market structure during kills on hours. So this right here is our entry. So let's see how this plays out. And as you can see, our take profit was hit. So this is the best SMC and easiest SMC strategy that you can use to become profitable. That's it, end this video. I hope you guys did enjoy this video, and I will be back with consistent videos. If you like this video, hit like button and subscribe to my YouTube channel. Thanks for watching our video.